One of the questions that we get is how we treat gold in portfolios. So do we treat it actually as a commodity or as its own asset class? And I would argue that because gold doesn't have a ton of uses outside of jewelry, that it almost should be treated as its own asset class. With silver, platinum, palladium, copper, all those different hard commodities there, precious metals, those I think can be treated a bit more as commodities because we have a situation where mining, supply and demand, and usage all fit into the picture there. So the usage of all those commodities can vary with how the US dollar is being treated, whether or not we have a lot of home building going on, whether or not we have a lot of industrial use going on in the case of silver. So those are the reasons why I think we should probably take that and separate it from gold. Gold as a portfolio allocator, it's fairly volatile. It's related heavily to geopolitical events. I think it's funny that in some cases people reference it as an inflation hedge and others as a deflation hedge. I would tend to more be a deflation hedge. But there are many different reasons why gold acts the way that it acts, but it's usually not because it's being used more. It's because it's that shiny little fear bar that we use in our portfolios. So if you have any comments, if you agree with me, if you disagree with me, leave them in the comment section. And we also recorded a podcast on Give Me Some Truth on precious metals and gold.